Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. You can find me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And we have a very special panel for y'all today. A couple returning guests. Starting, I'm going to go counterclockwise here. We got Kevin Shea at The Good Prick on Twitter, but he is far from a good prick. He's the best prick. What's going on, Kevin?
Not much, Bobby. I don't maintain it, as you know.
And I'm trying to make it happen.
I know.
This is what we continue to do. We also have Adrian Day from Adrian Day Asset Management. Adrian, it's been a while. It's great to have you back.
Thank you.
All right. And without further ado, this man needs no introduction. I'm incredibly honored and stoked that he is here today. And to me, he's a legend. So some of you may not know who he is yet, but as I said, he's a legend to me. It's my dad, Shelly Kraft, founder of SNN. Shelly, how's it going? Show off your quarantine do.
That's all right, Bob. I won't show off my ponytail. I would get too many negative comments, I'm sure. So I'm trying to stay positive.
Not here. You won't get any bad negative comments here, that's for sure. I think everyone's going to be like, man, I want that. I think we're trying to inspire a revolution here.
All right, I'll turn around once.
All right, turn around once. Let's see. Oh, that's beautiful. Look at that. So nicely wrapped, too. All right, well, Dad. So, Dad, this is your first time on here. As traditionally we do, give us and I know this might be tough, but if possible, give us your 30-second wrap on your background, and then maybe give your take on what you've been seeing in the market since all this really came down.
So imagine a guy going to Wall Street in 1984, and his first attempt at being a stockbroker. They handed me a month-old pink sheets and said, here's your telephone with push buttons on it, and you could make as many calls as you want, and you could receive as many calls as you want. So I said, but there's only 2 buttons, and the other one's red for hold. They said, go figure it out. Next thing I know, the room gets filled up with 2 more newbies like myself. No instruction, no training. There I go. I'm floundering at best. And the next thing I knew, I became the largest producer of that firm. I traded in penny stocks, which are now called, OTC listed companies or MicroCap, whatever. But at the end of the day, I've been in this world of small companies since the day I walked onto Wall Street.
Can I just interrupt? That's really interesting. A lot of your, Robert, maybe even you, but a lot of your listeners, I'm sure, will be really astonished to discover that the pink sheets actually were sheets and they were mailed out. So when you say they were a month old, that's not a surprise. And I'm sure Kevin knows that. Adrian,
they were hand delivered to my office. And I got the trader's old sheets because I just was I had some inside connections to management, but there was the only quotes available, right? Other than Quotron with, New York listed stocks, we didn't have anything else. I'll tell you, if there's anything that's changed for the better, it's the absolute disclosure, the ability for transparency, and all of the digital age has certainly changed the markets for the better, no question about it.
Very good. So, hey, Kevin, Adrian asked you a question. You probably do, we're not trying to age everybody here, but do you remember getting those sheets too?
No, I wasn't involved with that back then. I actually had a real job.
So, all right. So, Dad, going back to you real quick, before we get to our main topic today, give us your take. You've been through the 87 crash, .com boom. You've seen a few boom and busts and recoveries and all the like. So, what's been your take thus far and what you've been seeing in the markets?
The good stocks are still good. The bad ones are still bad. You got to pick your spots, man. That's what it is.
Were you picking today?
Today, I was literally avoiding looking at the screen. It was, I don't know what shade of red everything I had was, but
you missed You missed the gain, the biggest gain I've seen in forever. 3,000% today. SPI.
Nice.
It went from $3-ish to something like $40-ish. Ridiculous. So the market is crazy.
Well, volatility is,
That's,
I mean, if I was in anticipation of this panel. I was,
Oh my God.
I was
Wow.
trying to figure out if I belong, because my tendency is to trade, right? And he's got so many interesting, smart, much smarter than me, value investors that I didn't want to put myself out to pasture too fast. But I did want to, noticeably look at a market like today, and there's obviously tons of ways to make money.
Yeah. Hey, real quick, Kevin, just to make mention of SPI. Oh my, I don't know how I missed this today. Oh my gosh. Just EV, right? We're EV, and then 3,000%. Well, go figure, right?
well, what happened was if your name had power in it today, if the name of the company had power in it, it was absolutely pushed up. Polar Power, a few others. It was crazy.
I mean, on a day that the markets in general are down 2.37% or about 2%.
SPI goes up 3,000%. Could have made you a year.
Yeah, could have made your career.
Correct. Yeah.
All right.
So we actually have a topic today, though, right? Rather than bullshitting.
I kind of, you want to keep bullshit? I mean, come on, Kevin, This is what we do. We either do a topic or bullshit. We sometimes do both. But here, let's get to that topic. Fine. Today's topic sent in by on Twitter, and I believe it was sent by @Trosclair. I will fix that in a minute. But the topic today is what truly defines good management and how to spot these characteristics and where it can be translated on the P&L and balance sheet. Okay. It's a big topic. There's a lot that we can cover here, especially in microcaps, because it's very much management driven. But I'm going to go to you, Kevin, first. For you, let's get everybody's individual definitions of what good management is first. So, Kevin, you want to start us off there?
Good management is very difficult to define because it's so broad. It has to do with experiences. It has to do with characteristics of the individual. It has to deal with, controlling emotions. It has so much to do with so many different things. And I think that what came to my mind is that there's the quality of the management individuals themselves, I think has a significant impact upon the capacity for being able to generate a good business. It's just not the business. So, I mean, there's so much to be defined, and I think we have an hour. I'm sure we could talk about it for 2 hours. But as I said, I think that good management goes all over the place. And I think we know what poor management is. Might be easier to define. What not to do.
All right, Kevin, what shouldn't they do?
They shouldn't be over promotional. That's number one. They shouldn't be bouncing off the wall from here to there, trying to get together, a business plan that ranges too far. My general take, I mean, once I get involved with something, is to me, it's focus. If you don't focus, you're going to screw it all up. And that's where I believe the first point has to be made. Are you going to focus? And the other one is the focus is going to be on execution. In my opinion, if you execute well, everything else will follow. Don't be looking at the share price. Don't be looking over your shoulder. Put your nose to the grindstone. Every once in a while, pick it up. Maybe every quarter, see what your price is, see what the share price is. But really, the goal simply is to focus, and do it on execution. Sell, generate revenue. I mean, get a good product that sells, and have at it. I mean, half the problem with bad management, is you come up with a crappy product. And if you have a crappy product, but you have good management, you're still not going to succeed quite well. Is good management producing good products? Is it producing good staff? Does it produce a good culture? Does it produce any number of different things that one leans on when you're trying to build something? Again, I think we've had these conversations in the past on this session where quality I think has a bit to do with it. Because, and again, it goes on and on and on and on. We can talk forever.
Let's hope so. You know, we got an hour to fill here. So, Adrian, let me throw to you. You know, I've interviewed you many times in the past. You've come on here. You know, one of your main expertise is looking at junior mining stocks and the mining industry itself. You know, speaking specifically to that industry, you know, what are some of the characteristics of good and bad management there? Because is it anything different than what Kevin just said? You know, speaking more from a generalist perspective.
Well, a couple of things. First of all, you know, I think Kevin made just absolutely excellent points. There's one thing I'll disagree with him on, which we'll come to in a second, and that is good management with a crappy product. We'll come to that in a second. But other than that, I mean, I agree with absolutely everything he said, and not only agree, he really hit the nail on the head. He hit the main points. May I just step back a second, Robert, because the question, the topic that was raised actually begs the question whether good management is important. It makes that assumption. And I would like to just really emphasize to people, particularly with microcaps, but frankly with any company, to me, management is the very first thing I look at all the time. Now, Warren Buffett said something famous, and I can't quite quote him. And by the way, thank you for inviting me on to fill a gap at the last minute, but I'm not prepared with all my exact quotes and so on. But Buffett said something about he likes to invest in companies that are so simple with such a wide moat that even an idiot couldn't screw it up because sooner or later an idiot will run the company. Something like that.
Yeah.
Somebody probably knows the quote. Yes, but no. To me, management is where I start with any company, even big ones. We'll get to the microcaps, but even big ones. I mean, obviously Apple, Tesla. I mean, you only have to look at what happened when Steve Jobs stepped away from Apple and then when he stepped back. Management is absolutely key. But even with what we'll call innovative companies like, you know, Tesla and Apple, where obviously a visionary is important. Look at Nestle, for example. Look what happened to Nestle when they changed management a few years ago. I forget his name, Schneider, I think. Don't quote me. Yeah, Schneider, Mark Schneider. You know, one person can fundamentally change. It takes longer, of course, just as it takes longer to turn a tanker around than it takes to turn you know, a weekend motorboat around. But one man can make a difference even to a large established company like Nestle. Or on the other hand, look at HSBC, which went the other direction with management in my view. HSBC for 170 years picked top management, CEOs who had had their entire career at HSBC. And in some famous cases, they started in the mailroom or the stockroom and worked their way up. And the key to that is those people were imbued with the culture of the company. The culture of the company was not going to change because the people had been there all their lives and were surrounded by people at the top who had been there all their lives. HSBC, what, more than a decade ago now probably, you know, decided to drink the Kool-Aid and look for Wall Street and you know, investment bankers and so on. And the culture changed, the management changed, the company changed. So, you know, to me, it matters. People matter, even at huge companies, they matter. Now, the smaller the company, typically, the more important, the more critical management is. I will never invest in a junior mining company, or in fact in any mining company, because they're all small, right? Without knowing management. And by knowing management, I mean, you know, if it's Barrick, I'm lucky enough to have lunch with the guy. But if it's a smaller company, I will have dinner and I will have drinks and I will go out, you know, to a nightclub or whatever it is, you know, drinking. I'll go on a trip with the guy. I'll get to know the person. To me, that is critical. because everyone can BS what they do, right? And what they think. But when you're around a person, you actually see how they are. I'm not a geologist, but I go on a lot of field trips to look at mines or properties. The reason I go on field trips, I always ask, who's going to be leading a tour? And if it's a CEO or a couple of top people from the company, I will go, and I don't go to pick up rocks and look at them through my magnifying glass because I don't have the training for that. I go to watch and observe the people. How does management treat people? If you're running a mining site, you might be the most sophisticated person out there, but you need to know how to interact with what we'll call ordinary people. And if I go out to dinner with someone and they treat the wait staff in a rude manner, and they're obnoxious to the front person, the front desk, the hostess, because they have to wait 5 minutes, that's a reflection on character. And you can bet your bottom dollar, but when you go down to the middle of Mexico with that person, they are not treated with respect and love by the ordinary people. Conversely, you see sometimes people go down and the miners will stop, the cooks, the women who cook the food will all come out and they'll greet the guy and they'll hug him pre-COVID. You know, they'll hug the guy and kiss him and they're happy to see him. And that's important because I don't mean a happy campsite makes for a good company. It's important that people, you know, enjoy where they work, give you their best, etc. And I just one more thing before, you know, the way people treat money. You know, if a junior company goes out and raises, you know, $1.5 million or something, and then invites 25 people to a private room in the most expensive restaurant in San Francisco and orders a $1,000 bottle of wine, I'm thinking, is that what they think about shareholders' money? Because shareholders sure as heck didn't give them money to spend on bottles of wine. So those sort of things to me, just being around management, those sort of things can tell you an awful lot about the way a person interacts with people, the way a person thinks about money, etc. I'll leave it at that, but I've got lots more to say later.
Absolutely. No, and we'll definitely have a lot more to follow up there. So, you know, Shelly, going to you, I mean, with your experience, you know, as a broker and then eventually as an investment banker, you were underwrote over 300 stocks. You know, I mean, has the nature of management from your day when you were underwriting all these companies, has that changed even today, or are some of these characteristics still things that you look for even from those experiences?
Since Wall Street, I looked at a Wall Street brokerage firm like it was a bus stop. There was another bus coming in every 5 minutes, which in terms of, you know, color, companies would come in wanting to meet us because we financed companies. So I had to quickly figure out how to judge one CEO from another. And the first three things that I used as my guide was in judging the CEO or the person in charge that was running it was three things: their vision, their passion, and their capability. And everything having to do with the questions that I asked about the company had to do with those three topics. I could always turn it over to a numbers guy or a guy that specialized in due diligence, background checks, all of that. But if the CEO or person in charge didn't have passion, they didn't check that box. If they didn't have vision, you know, why are they in this business? What was their, you know, what was their calling? What, you know, like for instance, in a biotech company and they're, you know, trying to create a molecule to treat cancer. Well, somebody in their family probably, you know, died from it or friends or someone, and it drove them to go in every day to work on it. I mean, that's a tireless function. And then capability. You know, you have to start looking at their background, education, experience. So we're talking about the horse and the jockey in reality. So I focused on the jockey like you guys focus on management. And a lot of times you could find a B quality company and an A quality management team, and you can make some money. I mean, that's what it's all about. But, you know, I've seen all shapes and sizes, genders, you know, backgrounds, etc. And you know how you know, you just know that someone has that vision, you know. So tell me, where do you see the company in 5 years? They're prepared. They're not thinking, this is what we want to do. This is how we're going to get there. You give me a roadmap and a blueprint and not tell me what your exit strategy is in the first meeting. You check the box. Now, capability, you got to dig a little deeper. You know, if a guy never took a business course in college and his father was a CPA, that's not exactly a guy that's going to necessarily understand the need to how to treat money. And first of all, how to count it, let alone how to raise it. So my feelings about this was, if you're going to put this person that's in charge in front of money, are they going to fail? Are they going to succeed? And are they going to hopefully not be promoting? Stick to the facts, give us your insights, give us your visions. And to me, the rest will fall in place. That's been my experience. And it still stands for me today.
I mean, I think across the board, the main two things that, at least on the good side, or good or bad, this is one of the things really directly answering the question, where it can then be translated in the P&L and on the balance sheet, is you want to kind of look at what their incentivization is, right? You want to see what kind of ownership that management team or CEO has in the business. And then also looking at their capital allocation strategy, speaking that to what you said about vision, saving, I mean, everybody just talked about that too. You know, so in terms of incentives and capital allocation strategy, and I'll throw it to everybody here. What do you think are some of the things that you like to see and not see in terms in that respect? Kevin?
Yeah, well, you know, I'd jump in there and sit down and say, I don't think that's on the top of the head. That's not top of the head type of considerations that a management group should have. You know, yeah, you do have to go out and get money, and yeah, you have to go and do these things. But those are the do things. That's the do list, the checklist. You got to get this, you got to get the money, et cetera, et cetera, et cetera. I think the three of us all have these projected things that are more quality related, that are characteristics of the individual, that are the visions of people. And those things seem to be, you know, top of the head when you're looking at good management. Now, if they screw it up, you know, because they don't know how to do something, or they hire a CFO and the CFO sucks, then yeah, the guy's not a very good manager, because you can't hire the people to execute those things that he may not have the highest skill set in. You know, so again, I mean, a good management team, if you want to look at it from that perspective, has to be a few people who are fully aligned with each other. They're not competing with each other for grandiose success or whatever it is. That they are indeed all bought into the same thing. They all share the vision, and the vision is easily projected to others. I think that's the other part about it is that as Adrian was saying, as we mentioned, culture oftentimes is just as important as many other things relative to the success of a company or the success of a management team. If you build the right culture, then people will be executing and people will be performing admirably. If they don't know what to do, then they don't. It goes back to what Shelly said, and I will harp a little bit on what Adam Epstein suggests, that if the CEO, this type of CEO, and then by default, when you have a good management team, the CFO and the COO, if they can't tell the story very readily, okay, in a short, very short, very simple, very simple, they will not be a very good management team. You know, the idea of being able to project the vision, project the passion, and doing it in a relatively short period of time will attract investors, okay? So, I mean, is a good management team capable of being able to promote their business admirably in a completely aligned fashion? That's another part of it is being able to tell the story of the business. I mean, it starts at again, where do you? That's what I'm saying. Good management starts up here someplace, and goes all the way down to the bottom about day-to-day execution of the to-do list. And that's one of the reasons why I'm saying is, you know, put it here. How do you define good management? Do you define it by broad characteristics? Do you define it by execution? Do you define it by capability, as Shelly was saying? It's a bunch of different stuff. The question that I have is really quite fascinating. Is having been through the venture capital routine in my past, the one question that I have is you look at these guys who haven't even graduated college. Okay, there's three of them, three big ones. Okay, or four if you want to count the two guys in Google. None of them graduated from college. None of them had any capability to begin with. They had vision, they had passion, and the funny thing is that the VCs didn't immediately cut them off at the feet and say, you can't be a CEO, you didn't even graduate from college. You know, so the thing that interests me in this discussion of good management is how do you develop good management? I mean, did Bill Gates, what's his name, the guy on Facebook, and the two guys on Google, and the two guys on Google, did they just walk into an office sometimes and say, I'm a good manager? I mean, they had zero expertise, zero capabilities. So how did they end up being good management if one would agree that they are indeed good management? You know, again, I'll go back to what Adrian said, is you might have bad management but a really good business and succeed, or the other way around. You have a shitty product with good management that can turn it around. So that's a question that I have is that how do you define, how do these venture capital guys, and as Shelly has said, walk into the office, how do these guys look at a 20-year-old guy, sit down and say, that guy is going to be a great CEO? I mean, that's a stretch.
Hey, as a 31-year-old CEO, I look at myself in the mirror every day asking that damn question. Like, how does anybody possibly think I could be a good CEO? Yeah. You know, but I mean, Dad, Adrian, I mean, this is a great question posed by Kevin. You know, what do you guys think?
Well, I want to add one thing. It's like, you know, you how many times have you seen a guy or a woman step from a Fortune 500 company into a position of management in a micro-cap company? And you know, and it's like Congress. You know, there's one side and the other side. There's two opinions because everybody's entitled to have one. At the end of the day, the guy's gone to the best universities, or woman has gone to through the best channels, and they come into the micro-cap company and they want a $350,000 to $500,000 salary to start. They want access to a private plane. They want their pension fund in place. They want to work. They want a month vacation. And meanwhile, investors are going, wait, we just got this person from a Fortune 500 company. Oh my goodness. Well, culture, and the culture of bringing someone from a Fortune 500 company, you know, let's say from a large pharmaceutical company where they did very well, incredible earnings, pension and all, and now they're going into a small biotech company. It's like, you want to see it, you know, a fish out of a bowl. There you go. How many times have we seen it? And I question a lot of that. I get anxiety when I speak to someone that's so over, you know, qualified to be in a biotech company. And then I want to know, where's the guy that originated the idea? The guy that was in the laboratory, the guy that was putting the stuff in the test tubes. Where's that guy? What happened to him? And, you know,
or her.
Where is that person? Where is that person? And they've been either put back in the lab or out of the company. And, you know, it happens across the board. And I've seen it a lot. And that's,
I mean, Dad,
a red flag.
How many times have we done interviews with some of these biotech CEOs and microcap companies, and we ask them their background, and you're like, oh my God. And then out off camera, they look at us and they're like, yeah, I have no idea what I got myself into. You know, going to 1,000 conferences a year and, you know, dealing with shareholders. What all they really care about is, you know, just doing the work.
Right.
I mean, you can say that across the board, but.
And they're usually older.
In biotech.
And they've gone through the battles and the wars, and they think that it's going to be an easy ride in a smaller company, number one. And then what really we need to talk about is the alignment of vested interest in management with shareholders, right? So, you know, I've looked at a lot of companies, and either they have, you know, too many shares or they have too few shares. And, you know, it's a complicated, you know, appreciation of how much insiders that are running the company should own. So they're aligned with us, right, as investors. And, you know, I just want to bring that up and see what the rest of the crew says.
I mean, I would even take Kevin, you know, not to get back to Kevin's question, but I would even take it a step further where, and it hits on some of the stuff that you said and Adrian said earlier, is not just your 20-year-old new CEO with a great idea looking at VC money, but even taking some executives that have no public company experience whatsoever that are coming in and now running not just a public company, but coming into microcap land, you know, like that is a whole other beast altogether, you know? So Kevin, Adrian,
it'll be quite short, but there's a ton of people who are starting up, you know, early companies, microcap companies. They have no experience as a CEO. They may have vast experience in another company, a large company. And the question is, does that translate? So I mean, really, it's a translation issue. Your dad said it. I should say Shelly said it. But when you bring in somebody,
he goes by Bobby's father now. Okay, this is
Bobby's dad.
Okay, let's just make sure that's clear.
But again, when you are dealing with this whole thing of you know, good management. Are we talking about micro-cap companies? Are we talking about mid-cap companies? Are we talking about big-ass companies? I mean, Adrian said earlier, you know, the Apple found themselves in a fiasco when they brought in whatever the hell the guy's name was, I forget. I'm also familiar with another company. It was Apollo Computer way back when, where they had the visionary. Then they went and they got a guy from GE, and as soon as they brought the guy from GE, and the company went right down the shitter. So there's quite a bit of stuff there. But again, you know, and I'm familiar with this large automobile company in Detroit, and they keep changing their management all the time. And sometimes they go to a person who actually understands cars, then they go to a marketing guy, then they go to a finance guy. They don't know where the hell they're going, okay? They just keep turning over their CEOs. No, that's ineffective, you know, but that's the way it works. Again, go back to Gates. They never turned over the CEO. Again, so how do you, I mean, Shelly may have an observation of this thing, but how do you know? I mean, how do the venture capital companies choose and pick and choose? They oftentimes says, yeah, that's a great idea, but you're not going to be in charge. We're going to get this guy in charge. He's already run 3 or 4 companies and he's done it effectively. And so we're going to put him in charge as the CEO, and you're going to be chief fill in the blank. Okay. So again, is it these questions at micro-cap level? Okay. You know, you're trying to go through these characteristics and then, you know, check them all off, and maybe you add them all up and then you end up in 97. You know, you figure out some number, you figure out some scoring capacity. So again, it's a fascinating thing, because some of the guys with the greatest guys and gals with the greatest vision and still fail. Okay, so then the question becomes: geez, that guy should have succeeded, but that person failed. So now you can go back and test your theory against, you know, what's good management, and do our characteristics that we have written down on a piece of paper, do they actually mean anything? I mean, can you take an academic perspective and go through these things and fill in the blanks and get to a point where you say, that person has the best chance of being successful, even though.
I mean, you think about it with like sports teams, right? You know, we always ask the question of, hey, your favorite team, you know, we talk about this all the time. Like, could have Belichick's system been good for, you know, who's for Ryan Leaf. Oh, wow. That was a deep cut right there for anybody who,
Oh, he flamed fast, didn't he?
he did.
Didn't he become a thief? Didn't he do something really bad?
He had some issues. I think he was a drug addict too.
But
you know, okay, so you know, a Ryan Leaf or you know any of these other quarterbacks or use any other sports analogy. I mean, that's one of the things we keep going back and forth here is that you know, you take A+ management, you put them in a C, B, C company. Like, does that still succeed? You know, it can and cannot, but I mean, this is what we keep going.
Another sports analogy. I mean, you can have a great batsman who might also be a great bowler. Maybe he's got the wickedest googly in the world. But your point.
I don't even know what sport this is. What sport is this?
I'm
cricket,
kidding.
come on.
Is this cricket? Okay.
But he may not make a good captain.
Okay.
But you know, it's interesting. I mentioned earlier that I'm not a geologist. I think judging people is a skill. It's a soft skill, but it's a skill just like being a geologist or just like a lot of other skills. And some people in life, we know this, people, and if they're honest with themselves, people know it themselves. Some people are just not good judges of character. You know, how on earth could I have gone out with that guy? You know, didn't I see it? Or what on earth made me lend money to that guy? I should have known I was never getting it back. Some people just are not good judges of character, and some people are good judges of character. So one of my sort of pet themes, if you like, in investing is know yourself. Know what you're good at and focus on what you're good at and where you have an advantage. And, you know, be very, very cautious on things like judging people maybe, or, you know, looking at geology reports maybe, but be very cautious or ask other people's opinion on things you're not good at. But, you know, someone asked, I think you asked a question, or was it Kevin? I can't remember, but, you know, when someone walks in the room, believe me, if you had been sitting there before anyone had heard of Steve Jobs and had just come back from India, or was it jail? Which one was he in first? Jail or India? I can't remember. But he'd just come back and he started talking to you about his vision for Apple, I think you would have been excited. There's a famous mining entrepreneur called Robert Friedland. I remember meeting, and he actually traveled India with Steve Jobs. Interesting story. Well, no, they were picking apples in an orchard together. Interesting story, but
I want to hear that story.
Meeting Friedland when he was just starting out on Galactic, which turned out to be a environmental disaster, but that's a different story. But you met the guy and you said, wow, I must invest with this guy. And there was just something about him, and something was the vision, the dedication. I mean, someone who's a CEO of a MicroCap has to be dedicated. The idea of saying, I'm a CEO of a MicroCap, but you know, I'm going to Italy next month instead of the main mining conference of the year. I mean, this is BS. You've got to be dedicated. You've got to be taking phone calls all night and all weekend. It's got to be your passion. And you've got, as we've already said. So there's a wonderful saying about Bob Friedland, which is that every time Bob Friedland opens his mouth, the hand to wallet reflex gets automatically instigated, because you just want to give him money. Whatever he's doing next, you want to give him money because you want to back him. And I can remember meeting a few people very early on in their careers where I just said, oh yeah, this guy's got it. He's got as good a chance of success as anyone. And let me just circle back, if I may. I said there was one thing Kevin said I disagreed with, and that is certainly in the mining business. You know, in exploration, just like in biotech, I guess, but in exploration, most exploration projects are going to fail, right? Most are going to fail. So it's not a matter of finding a good project and succeeding. It's a matter of trying it and trying it and trying it. And so I always say in the exploration business, I will take a good management with a lousy project and no cash over bad management with a great project and lots of money, because they will waste the money and they will screw up the project, if you'll pardon my French, somehow. Whereas a good manager will fail and try again, and fail and try again. And I can think of many companies, some of my best wins in the mining business. I don't know if the SEC doesn't like you talking about wins, so I won't mention names, but I'll just say some of them, you had to wait for 10 or 12 years until, 35 cents, 50 cents, 35 cents, dollar, 20 cents, and then suddenly they succeeded. $1, $2, $5, $20. And you just have to be patient, but eventually good people will succeed.
So I think one question I keep having in my mind, especially when I think of the topic that we're talking about today, and I was speaking really to our audience, that is, I'd say more or less a retail focused audience. And I'll caveat with this, in the small micro nano cap space, access to management, one of the advantages we have is that access to management, while not available all the time, is more available than, let's say, small cap and beyond. I think we can all agree there. So there is that. But let's take, for instance, there's retail investors that were just like, I know what I like, but I'd just rather not deal with, I don't feel comfortable talking with management. I want to figure out a way in which to assess management without ever having to talk to them in some respect, or asking a live question or something like that. I want to just be able to assess it. So what are some things that investors who would prefer not to speak directly to management can look for nowadays to as benchmarks of like, okay, that looks interesting, that's actually a good thing, and then conversely also a bad thing? I open it to the floor. Shelly, you're first.
Well, in actuality, it may be self-serving, but there's more and more video interviews of CEOs out there and available for them to literally see how the CEO or the C-level management answers these questions. Now, getting back to Adrian, he said something that was, boom, 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 bells and all whistles. And that is that experience of visiting with management. And, it's great to be able to go on the road with them or meet them for a meal, but a lot of times you don't have that luxury. And, you still, you may have a 5-minute interview, you may have a half an hour one-on-one, and this is on your point, So what do you really ask to management when you're in a meeting? Well, sometimes I might ask, so, are you a family person? Do you have kids? How do you, where do you live? How do you spend your recreational time? Do you like to travel? And you get a sensibility about, someone's thoughts on education, on investing, on how they see the future and where they would invest in with their own money. And sometimes you don't even end up talking about their own particular company. And, you get around to it towards the tail end, but you're now visiting with a person. And, I've come away from some of these meetings where I actually like them. And on point, does that mean we should only do business with people we like and people we understand? Or, where does that kind of barrier to entry enter into it? But my thinking is if you have an opportunity to speak to management, it doesn't necessarily mean you have to focus now, what are you going to do in the fourth quarter? And, are you introducing any new products? And, are you planning on trying to exercise your warrants? Sometimes that's a question that everybody in the world asks the same person. Come up with something new that really has to do with the personalized, engagement. And you learn so much more about that person. That's really on Adrian's point.
I'll go back to your question, Bobby. I think you've asked the question is what can a retail investor review that's not going to be evident from being a one-on-one? If I understood you correctly, that this guy is afraid about one-on-ones. He doesn't look at it. He's looking at the quantitative. He's a quant.
Or she.
He or she, the person. No, come on. So the thing that ultimately what it comes down to is that if you have the vision, the passion, the product, the management, that it's going to end up in sales. Okay, that's the only gauge that you can use that basically tells you whether or not that good management with the good product is being successful. So if you are doing that, you're going to have to wait. I mean, you're not going to be one of the first and early persons in buying a company on spec. I mean, you're going to be on the other side of crossing the chasm. You're going to be watching the sales. You're going to be watching the sales ramp, and to see whether or not it's consistent. So, what do you look for? You look for maybe 6 quarters of consistent growth. That might be the simplest thing of being able to determine whether or not the company is worthy. I mean, it's kind of interesting to me because I'm a technical analyst type guy too. And the thing about it is that you can actually see through the share price movement what the investors are thinking about what they're thinking about the company. And so it's kind of like that's the tail end of the dog. So it's quite fascinating. But I think that's probably the thing that if you don't want to be interviewing a candidate CEO, you don't want to be talking to people on one-on-ones, which we've just discussed at length here. We all agree that that's an ideal thing to use as a means of being able to determine whether you want to get in. So I mean, ultimately, it comes down to sales. And it's not even share price, because share price is completely dependent upon the markets and the fluctuations in the market. And the company could be doing very, very well, and they just got a shitty share price.
Right.
I guess obviously
couldn't agree more. Sorry, Adrian.
No.
I was just saying I agree.
Yeah, it obviously depends on the stage that the company's at. Obviously, if you're looking at exploration companies, you're typically looking at companies that don't have discoveries yet. So you forget about sales, forget about earnings. And so, you can't look at those things. But I mean, there's a lot of things you can do. One is, or it could be, you don't think you're a good judge of character, right? You recognize you're not good at judging character. You listen to a pitch and you're always taken by a pitch. So talk to other people in the business and ask them, when you go to a mining show, Rick Rule's standing at his booth. For gosh sake, go and ask him for question. Do you know that guy? Does he have a good reputation? Talk to me, if you can find me, and so on. Ask people what they think, what the reputation is. That's one thing you can do. One of the things that has come up a couple of times, but we haven't really emphasized a lot, and that is, what are the things that we don't like about management? And I think you've asked us that, Robert, but that's Bobby. That's
both work.
Both, okay.
Yeah.
That's a good question. I'll just say a couple of things right off the bat, and other people may add. One, Kevin, I think, mentioned it right in the very introduction. I want, with a junior company, I want the CEO, the management, to be focused on the business, not on the stock. Now, of course, if you have to raise more money, you want a higher stock price in order to raise money less dilutively. But when I talk to a new company, and all they're doing is complaining about their stock price being so low, or telling me all their plans for moving the stock price up, that does not impress me at all.
Right.
The other thing that doesn't impress me, frankly, is when I talk to someone I don't really know well, and they spend their entire pitch knocking competitors. Mm-hmm. Now, if I know someone very well, I'll pick up the phone and I'll say, hey, hope you don't mind me asking you, but there's a company with a project, 10 miles away from your project in Quebec. Do you know the guy? What can you tell me? And as a friend, he'll tell me, but I don't like a new CEO, someone I don't know, whose pitch as to why you should buy this royalty company is because all the other royalty companies are doing it.
Right.
Don't like that at all.
I would agree. That's the one thing that I mentioned at the beginning, and you mentioned it also, Adrian, is that it's easier to define bad management than it is to define good management in a fashion. And it's really quite funny. I think you mentioned it, Adrian, is that, you know, there's a blowhard CEO who thinks he's the best thing since sliced bread, who was working for a big ass company, and now he wants $500,000 of a salary. Number one, it's like, no. There's a few more things that are easy to define. Current company that I have watched, you look at it, you immediately sense something where when the CEO's daughter, who was a lawyer, is put in charge as being the COO. That was like, no. I mean, right there. And not only did that continued, where exactly what happened is that this company, through its PR activities, even in the written part of their PR, there was bitching and moaning about they did this and yada yada yada. We can't. It was ridiculous. I'm not even going to mention the name because it's too silly. But it's sometimes very easy to describe bad management. Similarly, it's really quite funny. As I tend to be a pretty direct guy when I'm on one-on-ones. You know, and at one point in time, I asked the CEO, "Tell me why you're the CEO," and he couldn't.
I love that question.
Yeah, I mean, I'll tell you who it was after the whole thing was over. And the guy was brilliant, but he sucked as a CEO. And I asked those questions. I mean, why are you the CEO? Please tell me. And if they stumble at all, then you sit down and you go, oh my God, this guy's in trouble. So there are some things that I think when you push and shove at one-on-ones, you really want to, if you don't know the guy or person, ask them the hard questions.
Hey, Kevin, what's a good answer to that question? That's a hard question.
It's a very hard question. The answer is, why are you the CEO? Is because it's going to end up being, I'm the smartest guy in the room. Okay. And I had the best idea, and I'm implementing it right now. Okay. This guy had a company. It was already 60 people, and you still couldn't figure out what the hell they did. And he was off still going off academic trips and such. Yeah. And said, no. And then the guy next to him, this was even better. Then the guy next to him, I said, are you the CEO? He says, no, I'm the vice president of sales. I said, what do you do? And he just went, okay. They were wanting to talk about their product and all this stuff. So there are, I think, ways of being able to, as Adrian said, you know, you might not have to go out to dinner with the guy to figure out what's going on. But I like that idea, by the way. But you can be very direct and force the guy to answer the questions that are oftentimes not asked. Okay.
There is a danger, I find. Someone said, sorry. I was just going to say, someone mentioned earlier, but there is a little bit of a danger in getting to know management too well. And I see it myself. Some managements I respect. I think they're great, but we don't have a connection. You know, they like rap music, I like opera. They like quarterback things. What do you call them? Football, American football.
Quarterback things, yeah.
I like
quarterback things.
So, but I respect them as CEOs. But there are other people, we just have a connection. And that can be dangerous, because it's dangerous. I found this myself, I'll admit, it's dangerous to like the management too much because you forgive them too much. And from a personal point of view, it might be appropriate to forgive them. Well, that was understandable. I know why they did it. Stupid decision, but I can see it, and it failed. But if you're friends with the guy, maybe you forgive too much. But I've overcome that, frankly.
I think that's a very good point.
Yeah.
Working to meet good management is a juggling act. To a certain extent, you know, I feel comfortable sometimes meeting a management team that's had experience with previous successful exit strategies. You know, you kind of, okay, these people know exactly what they're doing, and I can have it's a little earned in trust because they've been there, done that. And I kind of really feel good about that to a large extent. Also, you have, I can be shallow too. Like I would ask someone coming into my office for money on Wall Street, I would judge them by the clothes they wore. I would judge them whether or not they smoked. I would judge them. I would ask questions like, what kind of car do you drive? And I learned that the hard way. I once underwrote a company, handed the guys $6 million. And I found out that the week that they cashed the check and put it in their bank, they went down to Mercedes-Benz and bought three brand new Mercedes-Benz. And I said to myself, this has to be something I remember for the rest of my life. It's, we use our skills at judging people. Never in 100 million years that I think these guys were running to the Mercedes-Benz dealership and picking up 3 cars. And who knows what else they did, but it was indicative of the fact that they abused it and they weren't really good managers. And there's only 2 reasons why businesses fail. Number 1, undercapitalized. Number 2, mismanagement. So if we limit our checklist to passion, vision, capability, and watch out for mismanagement or them being undercapitalized because they ran through money, those are the things that I conveniently and carefully monitor so as to make sure I'm not supporting bad habits. That's, that's something that I could add to the conversation.
Let me turn the tables on you guys, ask you guys a question. You both have interviewed literally thousands of people.
Yes.
Okay. And either they are a quick 5-minute, 6-minute, 8-minute little tour of the guy, or gal, again, person. I call everybody guys by touch. My wife's happy to be called a guy. But ultimately, and you've done the 5-minute, the 8-minute, 10-minute. You also done longer term sessions in which you've interviewed a guy more at length. So if you can condense everything that you've done over those thousands and thousands of interviews, can you reflect back upon this thing and sit down and say, my goodness, this person is exceptionally capable. I got to know this in 7 or 8 minutes. How many times have you been able to sit down and say, wow, as I think somebody said it here, think, wow, this guy like Steve Jobs is brilliant. And you just say, Jesus, if I had an extra $2 million, this guy's going to get my money. Again, 10,000 people. Did you find, can you sit down and say 5 of those experiences were like, oh my goodness, this thing's going to be great?
Dad, do you want to go first or?
To answer your question, the answer is absolutely. And, I've literally had my hand in my pocket. I was so excited with some of these stories, but I would say that, I can I name companies or? No naming companies, but to make a long story short, you kind of know it when you hear it. Someone can check a lot of boxes in 5 to 6 minutes, really. And again, I hate to repeat myself, but I'll manage to do it. Passion, vision, and capability, someone who loves what they're doing is certainly going to show up every day and do it and enjoy it. And when you're in it to win it, and you can reflect, why do I love what I do? Because it's so interesting and I meet great people and I have so much fun doing it. I don't want to do anything else. And you can sense that from a CEO that could literally be doing anything else they want to do, but they've chosen this. And it's getting into asking those questions. Why do you want to do this? What's your driving? you know, what is it about this that you can't resist coming in every day and enjoying what you do? Now, some of them will say, well, I want to sell my stock and become a rich man, you know, or a rich woman, you know. And then other ones will say, well, I really want to cure mankind, humankind. You know, you get a sensibility, and when the answer doesn't have to be overly sophisticated, as long as it comes from the heart. And, you know, we're really interested when we do an interview, we're not interested in the price of the stock. We're not interested so much in how much money they have in the bank and all of that other stuff. We want to know the story of the company. What was it that started this? Where is it going? How is it going to get there? And why are you the person to lead us to that ending? And you know, you get a lot of stuff. You really do.
I would say for me, it's even simpler, you know, because I would definitely say, you know, depending on the industry, and I won't name which one, you know, there's definitely, they know the talking points that investors want to hear. So even if they give a very succinct, clear-cut message, you know, I tend to take that and you know, even if the person is an impressive interview and they know their stuff, they, you know, I sometimes kind of go, okay, they know their talking points. Let me take that a step further. And that's just for one industry. I won't name which one, but I'd say most industries and most sectors with management teams that I interview, the ones that are able to succinctly tell their story and answer their questions by packing a lot of information in a very short amount of time, those are the ones that are the most impressive. And that are also, you can just tell are humble in how they speak to this. I used an example on the Value Hive podcast where I was interviewed not that long ago by Brandon Balo, you know, where I've done interviews with management teams where instead of just promoting, you know, everything they're doing great and how they're, you know, how much better they are than their competition and all the successes, it's the companies that are willing to be humble and like, oh, here's some things we could be doing better. And there's been a few companies that I've interviewed publicly that we've put out and they've approved it and have said that as much. And those are the ones I'm always like, all right, I at the very least, whether I go and invest right away, I'm definitely going to be following that story because there's that humility there and understanding like, hey, this could all go to shit tomorrow, you know, and here's how, you know. So for me, that's something that's probably the number one thing I look for whenever I'm doing an interview. You know, anytime a company starts talking about their stock price, it's an immediate cut. Hey, you know, let's not talk about stock price. Let's we don't really care about that. And really that's really it. You know, if a biotech company can explain exactly what they're doing in 2 sentences or less, which is very difficult. So for any CEOs out there that are listening to this, if you can't do that, hey, no harm, no foul. Like that is a very difficult thing to do, especially in, you know, in the microcap space when it's, you know, very molecular. And that probably sounds stupid, but I think you know what I'm saying. But if you're in the industrials, consumer goods, services, you know, you should be able to explain what your business does. Even if you're a conglomerate, you should be able to explain what your company does in 1 sentence or less. If you can't, that's already a problem.
Yeah. I use the phrase to open up my conversations with simply this. Tell me what you do in 25 words or less. Because I'm starting to fall asleep at 26. Okay, really, I'm telling you. No, yep. I will literally, if the guy starts going on and droning on, I will literally do this. Just to give him a message, you know.
You know, we're always very careful as to, you know, when we're putting your one-on-one schedule together, Kevin, is, you know, we always prep the company like, look, you know, this is going to be a great one-on-one or you're potentially a life-altering, changing one-on-one for you.
No, no, we did one later on. This was about Jason after I had a one-on-one out in one of your shows. Classic.
Oh, I love it too much. So, I mean, I think we're pretty much there. I think I'd say at the end of the day to, you know, the person, by the way, who sent in this question is at MICTROS at Mictros, Trosclair. Thank you for sending in this question. I hope we did our best to answer it. Look, at the end of the day, it comes down to that experience. Go in and ask some management teams some questions, or see what they're saying on their quarterly calls, see what they're doing in interviews that, whether we've done them or other outfits out there. Just do your best to try and get as much much content as you can as to what some of these management teams have said publicly, and do your best. It's really hard, but I think if I could summarize some things, that I think we can all collectively agree are things to look out for, is high. if a management team is all collecting very higher than industry average salaries, look out. If they have a lower than average ownership in the company, might be something to look at. If they're just, the performance isn't there when it should, when they have a large addressable TAM, also probably something to look at. And then on the mining side is hitting, raising capital, especially if they're an exploration company not bringing any revenues, raising capital not at super dilutive measures quite frankly. And also starting to hit some discovery targets, or looking at ways in which they're well capitalized through all the various cycles. That was a very quick summary of a lot of information. I hope I covered it well enough. So, I think with that, let's get some final takes and where people can go and find more information about you and your businesses or your company. So, Adrian, correct anything that I just said, and maybe your final take on this topic.
My final take is just what we've been saying all along. Management is really important, or very important, I should say. Vision is important. If the management can't explain their vision, if the management can't explain their business, and if the management doesn't get excited, I remember saying to one person who was droning on and on and on, as Kevin would say, I remember saying to him, excuse me, if you're not excited, why should I be?
Exactly.
Yeah, I think all of those points are really important. And thank you for having me.
Of course. And Adrian, where can people go and find more information about you?
www.adrianday.com.
And Adrian Day Asset Management too.com, right?
Well, yeah. AdrianDayAssetManagement.com. But that's
Okay.
longer. Yeah.
Well, just want to make
But
sure.
thank you.
Of course. Kevin, final word?
I think the interesting part of this conversation was that almost entirely we directed it toward culture, characteristics, the nature of the individual, things of that type. And we did not get into a lot of conversations about how a good management operates and extracts value from what they have to offer. I think that was pretty fascinating, because that's where I know I started from, and it's even to the point where, as you know, I've been on the board of directors, and you can actually see this stuff in action, and it's quite fascinating to see. You really are looking at the individual's personality so much so, and I am, as I think we said it before, but I'm an Adam Epstein, follower. And I love the idea of being able to tell a story very quickly, because if you can't do that, I'm in an elevator and I walk out of the elevator and say, that person was boring. I didn't know what they were talking about, things of that type. So I think that's quite the take that I have on this thing. And where I sit, on Twitter and everywhere else. I don't care. I don't sell anything. So I'm not out there trying to,
That's why he's a great follow, everybody. He's not trying to sell anything. Just go follow him. He won't try and sell you anything.
Yeah.
One quick follow-up to that. At the end of the day, like, it's just a matter of efficiency, right? Like, if these management teams can't tell you what they do quickly, you're like, as a CEO, you really want to sit there for hours on end trying to explain to somebody that doesn't want to listen to more than 5 minutes of what you have to say, everything that the business does? Just from an efficiency standpoint, it's silly. But
the other end of it also is that you have to question if this person can't tell me readily what they do in a very short period of time, how the heck do they sell? when they walk into a corporate office and they start droning on again, like, oh God. Now, those people are probably more aware of what it is that they want. But again, I mean, if you can't correlate to those needs because you're up in some cloud somewhere, again, it's one of those situations. So if you can't explain it to me, how can you explain it to your customers?
Some of the best, some of the quote unquote best pitch people that I've interviewed or spoke with are, claim to be some of the best salespeople ever, and I'm just sitting there like, for sure. Like, yeah, you done yet? All right, Dad, final take. What do you got?
So how many times have you been sold in the first 5 minutes and sat for 25 minutes getting unsold by the same person? It just happens. You don't want to be sold. People don't want to be sold. They want to be enticed, but not sold. The other thing that I was going to say on point is that, we're required to allocate forward-looking statements when a management team says something about the future. What's really interesting? You can go and find out if they did that thing that they said they were going to do in the future. You can monitor achievement of milestones. And unbeknownst to some, I actually do check that stuff out. But anyway, I've enjoyed my time on your podcast, Bobby, with the Roundtable and the experts that I know and love. And it's always a pleasure. If you want me, call Bobby.
Dad, we were gentle with you, right? You had a good experience. You're not about to cut the ponytail off and come after me, right? Okay,
you guys were very gentle. Thank you.
All right, good. Well, guys, it's been a pleasure. Thank you so much for joining me today. Again, you can follow me on Twitter at BobbyKCraft, BobbyKCraft. You can listen to this and watch it on our YouTube channel at youtube.com/SNNWire. And I promise an audio only version of this is coming soon. Just working on a couple things in the background to make it look nice or sound nice and all that good stuff. All right. Well, everyone, have a great rest of your week and talk to you soon.
Thank you very much.
Thanks, Bob.